You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our conversation, touching on some pre-report expectations as on Monday, March 31st, we're going to see some more USDA reports.
Yeah, there are times in the market here where important information comes out that really catches the attention of traders, and the prospective plannings report at the end of March is one of the well, it's the time and key data that gives at least the first signal of what planted acres will be for these various crops this year, and on Monday we have that, and also the grain stocks report. But first, for the acres numbers, the USDA had come out earlier in its outlook conference and indicated they were expecting about 94 million acres of corn to be planted, and that compared to last year, that would be up about 3.4 or so million acres. The trade has come out now in pre-report trade estimates and is estimating that there'll be about 94.36 or 94.4 million acres. So if anything, they're a little bit higher. It's interesting to see the range of what's expected. On the high end, 96.6 million acres, and as low as 92.5. So if anything, I've heard more people personally or in the airwaves of ag market discussions talking about anything from 94 and a half to 95 or more million acres of corn. So you've got that type of momentum, that type of that train of thought coming in. The safest bet is to say, well, we'll go with what the USDA said, but we'll see where that goes. And then the acres that would be going then to corn would be coming out probably in the U.S. Corn Belt, coming out of soybeans largely. So the USDA had indicated again in their outlook form about 84 million acres of soybeans to be planted, and actually the trade is expecting about 83.7. So by about the same amount that the trade estimates for corn are above what USDA had said. The soybean numbers are lower than that. So there's about a difference of opinion of about 350, 360 million acres, or part 1,000 acres. So not a lot. So we'll be watching that, of course. They will come out with wheat estimates, wheat acreage estimates. They'll be using the winter wheat numbers from the January or earlier winter wheat seedings numbers, but what will be the key factor in the market will be the other spring wheat and durum numbers. Now, not listed right here. We in Kansas will be watching grain sorghum numbers. Overall, the USDA is their initial shot back in late February was to take down the grain sorghum planted acres figures by about 300,000 acres down to 6 million acres. So we'll be watching that out here in the West. Because again, it's between Kansas and Oklahoma and Texas where most of that grain sorghum's grown. So that'll be pretty important for us. The other side of the market information that's coming out that day will be in the quarterly stocks reports, and at least for me, Shelby, I'm thinking that we've got a pretty important moment in the grain markets to tell us if low prices for sorghum, if low prices for wheat have brought about or encouraged any increase in feeding of those crops relative to corn. So the trade estimates coming into that report are for about 8.15 million bushels of corn to be fed. That Dees number was about Dees first figure was about 12.007. So the difference, we're expecting about 3.9 million bushels of, billion bushels of corn to be fed. So we'll be watching to see how that comes about, and oh, excuse me, I think I said that wrong. We expect about 3.9 billion bushels of corn to be used after we take out exports, after we take out ethanol and wet corn milling. Then the difference will give us an estimate of how much was fed. So that's the best way to look at it. So we'll be watching that number close. Also be looking at wheat again, low priced wheat. At one time earlier this year, we were hearing a lot of discussion in Western Kansas around the feedlot areas of wheat being fed well, and with slow exports, gosh, it was there to be had. So I think we'll get some idea of whether that actually occurred over during that Dece through February timeframe. So both the old crop supply demand balance sheets are going to can potentially be affected by what comes out on Monday, and in those numbers through the quarterly stocks and usage, the DSFEB usage, as well as expectations for the coming year, as we look at the major acreage planted of all these crops.
What are we seeing when we look just at the Kansas grain market?
Kansas grain markets are uh, not doing very well. Just be honest, and that follows from uh, I guess uh, a lack of movement, positive movement in the futures generally overall. We have been trending sideways to somewhat lower on the corn, hard red winter wheat, soybean futures, and the cash markets are showing the same small amount of improvement in corn basis in some areas. Again, up about a nickel stronger in the Garden City area, our demand center in the state for corn basis. New crop bids also about a dime over than from the D's corn futures figures. But most other prices really pretty uh, I guess sideways to lower relative to cost of production figures. So pardon me. So the prospects right now for new crop bids for corn. And again, with the highest for corn, let's say 410, 425, 430 or 420 in a lot of areas. Here 450, the best bid in Garden City. We're covering direct costs for sure, but full economic costs are at risk with the both the both the um, land and the machinery costs not doing so well. Pardon me. Fighting a cold. Then for other crops, grain sorghum all lower down at uh, everything below $4 for the best prices. A lot of them at 375 at the top, 375, 385 at the top, 365 for the lower side. Um, so right in that time frame when planted acreage estimates are just around the corner for anybody planting feed grains. They'll look at corn, they'll look at sorghum, they'll look at the cost structure of both crops, and they'll see basically a situation that isn't very attractive for either one. But uh, but in terms of managing risk, uh, corn has if we get rain has high yield prospects. If we don't, grain sorghum's less expensive to put in generally. That's as a generality. I would also say for soybeans, best prices 987 in Topeka for cash prices, but everything else at 952 or 945 out to the west, 907, 927. So not a lot to yell about there. And wheat with again green up, crop risk just around the corner for wheat. We're seeing cash prices in the west actually below $5. Both the Colby and the Garden City area still at 536 or so at in the central part of the state and east central, Salina, Topeka, Hutchinson, and Pittsburgh about right at 5. So again, not great prices by any stretch. If anything, right now, the corn price has fallen off enough for new crop bids that we're seeing actually an increasing trend towards favoring soybeans in the Salina area, Topeka area, in particular, getting more to even in Hutchinson and still favoring out to the west the feed grains, of course. So just interesting to look at all these trends and I think the biggest thing to remember is that it's spring. I would add in, although we haven't talked much about weather of late, it is dry across most of the U.S. So on the one hand, man, we're going to make great progress planting these crops. But on the other, if moisture doesn't come, and then you have heightened uncertainty and fears about what'll happen this summer. So you got a kind of a two-edged sword. Strong progress, but gosh, we'll be looking for weather and rainfall as we move off into April and May and June.
And Dan, as we're thinking about the grain market, wanting to give us maybe a little bit more insight into soybeans for today?
Yeah. Um, my own thoughts are that the USDA's projection of 52.5 bushel per acre U.S. yields are probably pretty strong. They're looking at again about 84 million acres uh, planted of beans in this year, and by the time you look at all that and recrank through the numbers, etc., uh, the the USDA's projections for about 320 million. Uh, 320 million bushels of ending stocks, about 7.2% stocks to use, and a $10 price. If you follow my train of thought and think that that's pretty strong, then there's probably a 1/4 chance, about 25%, that we'll actually get that. If we get more of a yield along the lines of 51, like we have been getting, particularly when we see some pretty dry conditions, then you take that uh, I guess the supply demand balance sheet down some from 320 million down to 250, stocks to use just under six, and prices closer to 1150. I think there's about a 40% chance that that's going to happen. And take it even further down to 49.5, not that terribly low, but still lower yet than 51, but 30% chance of that. And you're down to below 200 million bushels of ending stocks, even with some rationing, and prices closer to 13. And then, of course, there's the 1 out of 20 big drought year, and that's then you're looking at far higher prices then. But that's 1 out of 20. We have a major drought. So my own my own perspective is, Shelby, that I think that the USDA's projections right now are for strong trend line yields on the high side are at least worth questioning. And at this moment, we need to I guess watch the weather, see how the crops develop, but really look at more of an average yield at this time to at least give credence to where that would take us. And that's probably taking us to something higher price wise than what we're seeing right now. That big limitation in the market is what's happening in Brazil. Anticipated record crop. We'll see if that actually shows up to the degree they're talking about. Trade tensions, all this has the market worried, but overall, I would wonder about what seasonal risk and uncertainty will bring us in coming months as we get these crops in the ground and then hope for rain to get things going and have a good crop in 2025.
Dan, I appreciate you taking the time to join us today.
Thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on agriculture today, but we'll be right back.